Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's have a look as usual in euro currency. So, in general, the plan that we have created recently with the possible short entry for the bears, for those of you who would like to do this based on the patterns that we have and discussed a lot of things, set in some kind of the vital area for the current bearish scenario, and by the recent performance we see that market actually is controlled by bears. So bears holds the situation under control. On the euro currency, despite that we have here some spikes, we haven't got any grabbers. So if you even take a look at the futures market, you will see that we do not have it. But at the same time, if you take a look at the dollar index, you will see that recently we've got another one. In fact, you could see that we have the cluster of the grabbers and the four grabbers in the same place, which actually adds some weight to bullish positions on the dollars, corresponding to bearish positions on the euro currency, and in general hold the lows that should be held if we speak about this big hand shorters pattern. Today we will get the payrolls, so it might become the trigger for the possible action. For instance, if it will be better than expected, ADP was a bit better, it could support the dollar, postpone the rate cut decision by the Fed, and theoretically it might be positive, which could just trigger the starting point of this action. So that's what we're looking for. Recently, if you take a look at some practical issues that we discussed, where to take position, how to take position. So you can see that yesterday we said that keep an eye on this possible pullback here. So this will be bread and butter. We will be watching for the 1775 retracement, and that will be best opportunity for taking position by two reasons. First of all, because market stands at the 618 already resistance from the whole downward direction. It can't come closer to the top without breaking the level and actually putting on the questions the bearish context. So that's actually the normal final level that usually retracement reaches. And that's the position for weekly grabber. Speaking about the short-term performance, yesterday we considered this one. If you remember, we said keep an eye, probably we will get here some deeper retracement. Some kind of the bread and butter buy opportunity. Here was maybe somebody of you also traded it. And that exactly has happened. So market has shown 618 level, excellent opportunity for taking position, and collapsed. Now take a look, we have clear ABCD down. So in fact, we have the Gartley's triple 2 pattern in place, which means that minimum target of this pullback probably will be back to the 1750, 1755. Also, it will be a retesting of this border, if you could see. That might be another chance. So if you haven't position taken here, that might be another chance. But this only if you have no objection to hold it for the weekend, because currently the escalation increasing on the Middle East. Although it is supportive mostly for the dollar, your currency probably will keep dropping from this point of view. Maybe it's not as risky, but still some surprise might happen. So I do not consider currently any bullish positions, because to start considering it, we need to see the break of the major bearish context. So particularly speaking on the dollar index, we need to break out down and signs of the failure of this pattern. Once markets start dropping and erasing the grabbers, that might be the signal the situation is changing. Until the lows stands in place and market holds it, the same on the euro currency, context remains bearish. That's why in the current circumstances we do not consider any longs. So that's probably all for now.